how many people come in. Give it a couple moments here. Do you see it on your page yet?
I don't know. I'm just watching you and being real, brother.
All right. Yeah, we're up. I see it here. Okay.
See? So hello, right, world.
So we're live. And go ahead and get started. So, hey, we wanted to take this opportunity to talk with the mortgage lender and really talk to that first-time home buyer using a VA loan. So today we've got Sam Royer with Heroes First Home Loans, and he is a Marine Corps veteran. He is a VA loan specialist, and he's coming from down in Daytona. And so thank you so much for being here today, Sam. We really appreciate it. So let's kick this stuff off, and let's just talk about what is a VA loan?
Introduce you at all? Come on, Eric. I know Joe's. Wait, but the H is silent.
That's right.
Eric is a Navy pilot, Navy veteran pilot. His wife is a SWO officer, which as a Marine, I had no clue what SWO meant, but it's Surface to Warfare Officer, and they are a real estate lending team up in Jacksonville, Florida, and just rock star people. And unfortunately, Eric went to UCLA, but his wife, made up for it going to Penn State University. So go Lions.
Yeah.
But go ahead, Eric.
Okay, so let's go ahead and get started. Let's just get right into it. VA loan, what is it, and who's eligible?
So VA loan, anybody that's out there in the world that is a veteran or currently serving in the military, you basically qualify for some benefits. Now, the only way somebody has ever served their country that's not eligible is if they've been dishonorably discharged from the military. So VA, they have the ultimate say in if you're eligible or not, but if you've served on active duty, if you've served in the reserves, you basically should be able to qualify for a VA loan. Now, when I say qualify, you still have to qualify with your credit, your collateral, and your capacity to repay. But, it's the VA eligibility is out there.
Awesome. Thank you so much. So I know we work with a lot of first-time home buyers, and they start talking to us about interest rates versus fees, and they've talked to the bigger lenders that are out there that really specialize with helping the active duty or veteran community. So I just want to see what your thoughts are on how a consumer first-time home buyer can ask that question. How can I compare apples to apples when I'm looking at rates and fees, and maybe it can help us out with that?
Well, it's kind of funny because when you said bigger lender, I'm thinking, Zeke, can you stand up in the background? Because he's the biggest lender you'll ever see. But no, in all honesty, yeah, there's a lot of misconception about what the cheapest mortgage is out there. And what people don't realize, Eric, is that mortgages, they change every day. Mortgage rates, they change every day. They can change times a day. Now, it's not as volatile as a stock market per se. But, if you called up 3 different places and you wanted to buy, let's say, US Air stock, right? If you call person A, the stock might be $10. You call person B 20 minutes later, the stock might be $10.50. You call person C, 2 hours later, the stock might be $11 or the opposite. So what happens is a lot of people say, how do I get the best rate? Well, literally what I always say is you got to line up 10 people. They have to call 10 lenders at the exact same time, and you basically have to pick whichever one says they have the cheapest rate. Now, this is where the interesting part comes in. And unfortunately, recently we've seen a lot of the bigger lenders, they're getting very aggressive with marketing low rates, okay? The problem is that when these mortgages go to, the end investors, pretty much the mortgages all cost the same no matter who you're looking at, okay? So company A, company B, company C, they don't have major price differences, meaning that, if I do a VA loan and company B does a VA loan, whatever the rate market is, it should be roughly the same. Now, what happens, though, is that, I made this nifty little chart here, which is very technically savvy. But basically, what you have is, let's pretend you called up lender A today, and the rate for today is 4.5%, which actually is not the rates today, and we're not going to talk about what rates are, but let's just use an example. If somebody's buying a $100,000 house, and today they called up and said, I would like to know what the rate is, and I said, let's say, Eric, you called me up, said, what's the rate for a $100,000 VA loan? I said, Eric, the rate is 4.5%. Well, when I say 4.5%, that means two things. One, they're not going to pay any fees, any origination fees or points to get that rate. Number two, there's a thing called lender fees. There's processing, underwriting, closing, different fees that are, we call them junk fees, right? Well, that for us is zero. Where other lenders might charge $500, $1,000, even up to $1,500 just to get a mortgage through their company, okay? Now, Eric, if I came to you, I said, listen, Eric, you're not going to pay me any points. You're not going to pay me any fees. I'm going to give you 4.5% rate, and your payment, now just your principal and interest payment, is going to be $506. Eric might feel comfortable with that, okay? But Eric, because he hasn't listened to our live video, okay, he calls lender B, and lender B says, hey, Eric, I can give you a 4% interest rate. Now, Eric, what would your reaction be if you just called Sam and Sam said your rate's 4.5, but now you just called lender B, or the second lender, and they said your rate's 4? Which one are you going to jump on?
4% all day.
Okay, you're jumping on 4%. And by all means, I would jump on 4% too. The problem is, okay, if somebody's rate is that much different, okay, there's probably fees associated with you getting it. Now, what happens is that normally, and this is a very...
So how do I find out what those fees are? Can I just, what questions should I be asking lenders? Like, hey, what's a point? What's a fee? What am I getting with this lower interest rate? What's a great way to ask lenders, since I've never done this before as a first-time home buyer?
Okay, great question. I should be educating a little bit better. This is how I would do it. I would just say, listen, you're telling me, you know, I've called around, I've heard different rates. I see you're telling me 4%. How much is that 4% actually costing me? Okay. Then the lender in that case would have to say, look, I am charging you X amount of points, be it an origination fee or a discount point, and they should be telling you what their junk fees are. Okay. For Heroes First Home Loans, we have it easy. Our junk fees are zero. Okay. We're never going to charge anybody money for them to actually get a mortgage. The reason why is they've served our country, they've served our community. Why should they pay us for us to lend them money? Okay. So let's pretend, Eric, you just called me up and said, Sam, I want a 4% interest rate. What my response to you should be is, Eric, if you want a 4% interest rate, it's going to cost you 2 points or $2,000 in the case of you borrowing $100,000.
And what is
now, Eric? Okay, normally a point is, there's two different sides to it. There is an origination fee, which back in a couple of years ago, that would always be called the first point or an origination fee. And then anything above that 1% or 1 point would be called discount points. The reason why is with mortgages, and a lot of people don't understand it, so I'm going to put this down for a second. With mortgages, there's profit made on the front end, there's profit made on the back end, okay? The front end profitability of a mortgage is whenever lenders are charging junk fees, things like processing fees, underwriting fees, and even origination fees, okay? Origination fees are something that really is padding a lender's profit. And what happens is, depending on the lender's appetite, they can either charge it or they don't have to charge it. And that's where my industry, I wish it was more streamlined, whereas it wasn't, hey, can you waive that fee or can you do this? And that's why I love what I do for a living with it's not my company, but our company, Heroes First Home Loans. Literally, it's zero. Okay, so it makes it easy. Now, when I have somebody call up and say, listen, Sam, your rate's kind of high, okay, or I got a better rate with somebody else, I will always tell them, listen, you got to go back and find out exactly what they're charging you to do it. And I'm actually going to jump back to my sheet quick, Eric. The reason I really want them to look at this, and this is kind of simple math, and sorry, this is the most goofy way of writing it on a piece of paper, but yeah, it's marine. So what happens is, look, Eric, if I'm giving you a 4.5% rate and your payment's $506, okay, it's not a bad payment. Now, Eric called the second lender and they said 4%. The difference from 4% to 4.5% on $100,000 is $506 minus $478, $28 a month. Okay. So what happens is, Eric, if you went with lender B for the 4%, you would save $28 a month, which is a lot of money, right? But Eric, you're paying $2,000 up front just to save 28 bucks a month. Okay, now let me back up on that because some people might not grasp that. If you didn't pay any fees, I'm going to give you a payment of $506. If you paid fees, I'm going to give you a payment of $478. Makes sense if you're going to stay in the house for 30 years. But the average time a person will hold a mortgage is anywhere from 4 to 7 years. In this example, what happens is the $28 a month savings, for them spending $2,000, it would take them 72 months just to break even. Okay.
Wow.
So do you understand what I mean by that, Eric?
Yeah. That's so really we're looking at if you're thinking about staying in your home for the long run, then it makes sense to pay a little bit up front and save on a lower interest rate. But if you're the average person that's only staying in your house for 5 to 7 years and you want to save money up front, it seems to, you're really not losing much on spending an interest rate fee or interest rate that doesn't have points or fees associated with it. Is that kind of what you're saying?
Yeah, pretty much. I mean, most people aren't staying in their house 30 years anymore. And especially with people that are serving in our military, whenever they're PCSing or they're coming to a new duty station, they're going to stay there 3-5 years maybe. So for them to have the cheapest mortgage isn't always getting the best interest rate. Having the cheapest mortgage is really what the cost is going to be over the time period you're going to stay there. Okay. And actually that's simple math too. And it can be Marine math if you want to call it that, Eric. But you take $478 or even $506 if you're going to stay in a property for, let's say, 5 years. So you're going to be at that duty station 5 years. And Eric, I told you your mortgage payment is going to be $506. 506 times 60 months or 5 years, you're going to pay the mortgage company $30,360. Okay. So basically, over that 5 years, that's a minimum you're going to pay them. Now, let's do the other math. $478 if you paid the fee up front times 60 months, that's $28,680. So it seems up front like you're paying 5 years. But don't forget, we have to add in the $2,000 you paid up front. And guess what the math comes to, Eric? $30,680. So basically, in this scenario, they broke even.
Wow. And that was over a period of 72 months?
Yeah, that was actually 5 years, 60 months.
Years. Got it. Wow.
So watch this. What could somebody do with $2,000, Eric, up front? Instead of them paying the mortgage company up front, could they buy a washer, a dryer? And that's also why the one thing that we do at Heroes First Home Loans, and I know you do with the Homes for Heroes program, basically with giving money back and honoring people, Heroes First Home Loans, we send them a $500 Visa reward card after closing. And I know if you want to talk about the benefit you offer, it's something that really, it's honoring people.
That's awesome. I appreciate that, Sam. I know that we face that question all the time with first-time home buyers, and this is a great opportunity to just talk to you one-on-one on that, and I'm breaking it down for us. So as a first-time home buyer, and what do I need to do to apply for a VA loan? Is there an eligibility requirement, or do I need to go to the VA and talk to them about getting a VA loan? How does that work?
So that's kind of something that a lot of people don't know, so I'm glad you asked. The VA does not lend money. Okay. So you're not going to call the VA up and say, hey, I want to go get a mortgage or I want to buy a house, okay? What we do is the VA insures the money that we lend to individual veterans as long as they qualify. So when that veteran applies, which they can apply through us, they can apply through a lot of different companies out there, what they're going to do is they're going to apply, and that lender is going to make sure that they qualify, number one, for a VA loan, and number two, just for a mortgage in general. And then what will happen is we'll give them a letter stating they're good to go. They would come to you, Eric, and basically you would go sell them a house.
Great. And with the VA loan, if I understand this correctly, it's zero down. Does that mean zero down, no money's coming out of my pocket, or are there closing costs associated with that? Or can you break that down a little bit?
Yeah. So basically, when you're buying a house, there's 3 different parts to it. There's down payment, there's closing costs, and then there's a thing called prepaid items. Now, what's really neat, the VA down payment requirement is a big fat 0. So that part you can kind of negate because you don't need it for VA purposes. Now, it doesn't stop a veteran from putting money down, but really the whole purpose of VA, VA was set up back in 1944 when a lot of service members were coming back from World War II. Well, what happened was is they really wanted to promote home ownership for veterans. So it actually was under the Servicemen Readjustment Act. And I think I messed up the word there, but literally it's something that, helped promote home ownership. So 0 is a down payment requirement. Now, the other two aspects, closing costs, there are fees associated when you are buying a house, okay? Now, for us, there's 0 fees, so that's easy as well. However, title companies, transfer taxes, and things of that nature are required in the state of Florida where we're at. So there are things there that we have to work on that the veteran will be responsible for. Now, the third part is called prepaid items. Those are things like your taxes and your fire insurance on the house. Those two items, the prepaid items and the closing costs, the great thing about VA and with being a good real estate agent, Eric, you can negotiate that the seller pay all those for you. So like my first house, the only thing I paid for was a home inspection. The seller actually paid all my other costs, and I got in the house for like $350.
Wow. Thank you. I have a couple more questions. So one of the things we always run into too is what's my credit score got to be to apply for a VA loan?
Actually, 0. VA doesn't actually have a credit score requirement. Okay. The only problem is VA actually has something, not VA, I'm sorry. Lenders have things that they have certain risk thresholds. And what I mean by a risk threshold, they only want to lend to certain individuals based off their credit profiles, okay? What I love about Heroes First Home Loans and our parent company, Cherry Creek Mortgage, we literally will look at a VA loan and make sure that we are trying to do everything we possibly can to get that veteran in a home. We realize a lot of veterans, especially with wartime and things like that, some of them that have gone through credit challenges. So just recently, I got a veteran into a home. They unfortunately had a bankruptcy, and the bankruptcy was only 14 months old, but we were able to get them in a home because they had extenuating circumstances. Credit scores, we've seen them down in the 570s, 580s, where there were compensating factors, and we were able to help them out. So it just really depends on the lender that you work with.
That's fantastic. Now, what if somebody does have credit issues? Can they come and talk to you about, hey, what's the best way to get on track? Or should I talk to somebody else? What do you guys usually do to help them out?
Yeah, we have a lot of situations like that. Normally what we'll do is we'll kind of guide them a little bit up front. But because we're not credit counselors, a lot of nonprofit agencies we work with and other places, they actually have credit counselors on staff that can help them out. So, and to be honest with you, Eric, it depends on if the veteran is truly, or even the buyer, it doesn't have to be a veteran, the buyer, if they're motivated and they know there's been credit challenges in the past, they work on them. And if they work on them and they just do it together as a team, we can pretty much accomplish anything.
Okay. Last question I have here before we start wrapping things up, the VA funding fee. Can you tell us a little bit about that? What is it? Is it required?
Okay, so a little bit of history about VA. So VA basically insures mortgages, kind of like I talked about. Now, obviously, there are certain times where a veteran might foreclose on a house or walk away from the house, and VA is stuck with a loss. And what I mean by that is they then give money to the lender for any loss the lender might have up to a certain percentage. So for VA to stick around and be around since 1944, they have to have money sitting there to ensure that they can take care of those losses. So what they do is for a veteran buyer, they charge a fee. It's called a funding fee. And depending on your type of service, if it was active duty, if it was reserve duty, if it was actually your second or third time using a VA, which Eric, you're going to follow up with that question. What happens is that they charge a fee. So like an active duty Marine, let's say, served 4 years, got out, his funding fee would be 2.15%. So what that means is that this $100,000, if the VA or if the veteran bought a $100,000 house, that 2.15% or $2,150 would actually be borrowed. So the veteran would borrow $102,150. So the nice thing is VA doesn't make you, they actually finance it for you. Now, if you're using a second time, if you've used your VA before, the VA funding fee is 3.3%. And if you were a reservist, the VA funding fee is 2.4%. Now, two other things. One, if you have a service-connected disability, guess what your VA funding fee is? It's a big fat 0. So guess what? If you do have a service-connected disability, one, thank you so much for your service and also for, you know, what's happened, but the VA honors you with a zero funding fee. Now, Eric, I told you to ask me a question. Do you remember what it was?
What happens if I've had more than one VA loan?
There you go. So some people don't know that VA is not just a one-time thing. You can actually, so I was an active duty Marine. I got out, I bought a house. My first time I bought a house, my VA funding fee was 2.15%. Now, when I sold that house, I then could go buy another house, okay? And I can use my VA. The only difference is my funding fee is now 3.3% when I bought that second house. One other thing some people don't know, in certain circumstances, you can actually have more than one VA loan. And we can go into that a whole different day, but that's a big topic. But you can actually have. So like an active duty sailor, let's say, moving from San Diego to Jacksonville, depending on how much eligibility you might have left, you might be able to actually have a VA loan where you lived in San Diego. Actually, San Diego is probably a bad example because the prices are so high. But literally, if they're moving from, let's say, Norfolk, then maybe down to Jacksonville, you might have eligibility left so that you can get a second VA loan.
Now, are you talking about your eligibility? Is that the same thing as your certificate of eligibility?
Correct. So certificate of eligibility, what we do is based off you qualifying for a VA loan, we would get like your DD-214 or a certificate of service, whereas we would send that to VA and then VA would send us a certificate stating that you are qualified for a VA loan. Now, when I say qualified, again, I'm just saying you're eligible. Qualified probably is the wrong word. So eligible for a VA loan, qualified, you still have to qualify credit, collateral, and capacity.
Now, do I have to do that online, or can I talk to you and have you guys do that? How would the service member know to go get a certificate of eligibility?
Actually, you can do it online. I've seen some people actually do it and pull it online. We can do it internally. It takes us 10 minutes.
Okay.
So now sometimes we get them back automatically, or sometimes we might need, you know, an extra piece of paper. And what I mean by that is like if you've had a prior VA loan, sometimes the VA asks for something showing that house was sold.
Got it.
So my team is pretty geared towards VA, so we kind of have it down.
So I think that wraps up all of our questions that we had here regarding the first-time homebuyer using a VA loan. I just wanted to give you an opportunity to talk about what Heroes First Home Loans does for the veteran and for the hero out there, and maybe you can tell us a little bit about what kind of program incentives you have, just to the audience that's listening here on Facebook land.
So basically, so for all of Facebook, Heroes First Home Loans, we are 100% geared towards doing any mortgage out there. But if for any reason you would be a military person, be it prior, current, or retired, military, law enforcement, educators, firefighters, healthcare workers, ministry, so a pastor, or even civil servants, what we do is honor you by giving back to you. And what we mean by that is very simply this. Like I was saying before, we don't charge anybody to do their mortgage, okay? You guys are going to pay a lot of money. We just talked about $30,000 over 5 years, right? You're going to pay a lot of money in interest. There's no reason as a company we want to charge you money up front to do your mortgage, okay? So that's number one. Number two, we want to welcome you home. It's very simple. There's a lot of things that are going to happen when you're buying a house. You're going to pay a lot of money out of pocket, and sometimes you might not if the seller's paying for it, but we want to welcome you home with a $500 Visa reward card after closing. So that's something that we'll send to you. And the last thing is we want to protect you. The first 2 years that you have a mortgage with us, what's going to happen is we're going to put you in a payment protection plan. That payment protection plan, if for any reason you would get disabled, we're going to help pay your mortgage up to $1,500 for 6 months. So it's about a $9,000 insurance policy we put on you just to say thank you. So that's kind of what Heroes First Home Loans is. It's not a marketing gimmick. It truly is a heartfelt passion. Jeff May is the CEO of our company. He owns the company. You know, we just want to give him the utmost respect and props for doing what he's doing for Heroes and people that serve. You know, we appreciate everybody that does it, anybody that put, and Eric, just like you have, you know, you and your wife and many of the people you work with, you know, we've all, you know, kind of walked the walk. So now we're just talk through what we do for a living, you know, to honor others.
Absolutely. Well, we appreciate you taking time to educate us on the VA loan and kind of just walking us through the 1, 2, 3s, ABCs, basics of it. And thank you so much for taking that opportunity and to educate us here. And Facebook link, if you guys have any questions, go ahead and post them down here on the comments, and we'll get back to you if it's not live. I'm going to go scroll through real quick to see if we have any questions that we can answer.
Now I get to play and see what people wrote.
Let's see.
Who's this Katie lady that keeps writing to you, Eric? You must have a fan on here.
I think that's it. So if you guys have any questions before we log off, go ahead and ask them now. If not,
or Eric, how can they reach you if they have any questions on the real estate end of VA? If somebody's a veteran and they're looking to buy, how do they get a hold of you?
Oh, I appreciate that. Just go ahead and click on my profile, Eric Hinojos. You can go to our Facebook page, Katie and Eric Hinojos /Navy to Navy Homes, and you can learn a little bit more about us. Or you can go to www.firstcoastheroes.com, and you can learn about how we help out heroes here on the First Coast. And appreciate it. You can just leave your information. You can private message me. You can call me at 904-607-7202. That would be another easy way. Or text me. That's a text capable phone. I think that's it. So, Sam, appreciate it.
All right, man.
Keep rocking.
Guess what? I'll probably see you. All right, guys. See you later.
All right, bye.
Bye. That's pretty cool. I am